What's up everybody, welcome to another episode of China Update, where I provide the most up-to-date political, economic and geostrategic analysis on the world's #2 economy. My name is Tony, let's jump in. Okay, first up guys, let's talk about the ongoing technology competition, also known as the technology decoupling by some people between the United States and China, by examining a tale of two chip companies from this week. The first chip company is a South Korean company called SK Hynix, HYNIX. This week we learned through reported leaks that US officials are seeking to prevent SK Hynix from undertaking a multi-billion-dollar retooling of a huge China-based facility so that it can more efficiently make more advanced memory chips. The company plans seek to upgrade the facility with advanced EUV chip-making machines made by the Dutch firm ASML, a firm reported to already be enjoying over $1 billion in sales in China per annum. The second company is the US giant Intel Corporation. Now, Intel also had a plan to expand China-based operations, and we also learned this week that these plans have been put on hold due to concerns from Washington, though this pause happened back in August. The plan had been to take over the abandoned factory of Global Foundries in the southwestern city of Chengdu, Sichuan, to ramp up its semiconductor production in China. US media is reporting that the plans were rejected by the White House itself. So we can see that US officials are more proactively seeking to prevent advanced chip manufacturing technology from going to China, though this has been the case for some time now. However, the massive pull of China's huge market, the biggest market in the world for chip manufacturing currently, means that many companies will likely increase lobbying efforts in Washington going forward. Now let's move on to the Delta outbreak in the country. The months-long Delta outbreak may finally be stabilizing in the mainland this week, with official local case numbers down from the hundreds to the dozens each day, and with new cases only appearing in a few localities rather than dozens of places across the country. However, officials are not out of the woods yet, as negligence or just plain bad luck could result in another disruptive and expensive outbreak. For example, officials in the capital city are not taking any chances, with Beijing's domestic travel restrictions tightening further this week. On Tuesday, flights to Beijing from provincial capitals or provinces that have what are considered mid or high-risk regions, which is quite a few at this point, were limited to one per day with less than 75% occupancy, and all flights from middle or high-risk areas have been cancelled. Since Tuesday, all people that wish to enter the capital must provide a COVID test, which is negative from the last 48 hours, and a green health code. This is a type of COVID passport for domestic travelers. Okay, next up, let's talk about China's coal production and its current power shortage crisis, which officials are currently facing. Oh, and by the way, if you guys are enjoying the content, hit that like button, please. It's a huge help. It's the only thing that can help a small channel like this be seen by more people. And if you're getting some value from the episode and you're watching this for the first time, maybe consider subscribing. Okay, plug over. International media this week is reporting that according to officials at the recent Glasgow Climate Conference, there was a last-minute demand from China and India to water down the language of the Glasgow Climate Pact. China wanted to replace the wording phase out with phase down in relation to coal power. This resulted in the final pledge signed by the countries, incorporating this change to phase down rather than phase out. Meanwhile, we learned this week from data published by the National Bureau of Statistics, which is based in Beijing, that China's output of coal in October saw its highest monthly increase in 6 years. China is currently the world's biggest producer and consumer of coal. There is some positive news on the coal front this week, though, in China. On Wednesday, the State Council, it's sort of like China's cabinet, announced that China will set up a special facility with over $31 billion to support transitioning to the cleaner and more efficient use of coal. So basically moving from dirtier coal to cleaner coal, which I guess is some progress. And while we're on coal, we need to touch on the power shortage situation, which we've done a lot of deep dives in previous episodes on. It still continues into this week. On the same day of the announcement I just mentioned, Premier Li Keqiang told foreign executives at a special meeting that China's shortage of electricity and coal had been, quote unquote, effectively resolved, and future supply was also secure, or is also secure. While the energy shortage situation has improved since last month, it would be a mischaracterization to say that it has been completely resolved, especially in the north, where there is still some rationing occurring. Okay, let's keep moving. China's newly established so-called National Anti-Monopoly Bureau opened in Beijing on Thursday of this week. The head of this new bureau is also the deputy head of China's top regulator, the State Administration of Market Regulation. So this new bureau will indeed have teeth. The bureau's responsibilities include drafting and implementing antitrust regulations, as well as, quote, helping Chinese companies deal with antitrust charges overseas. On the same day, the State Administration of Market Regulations published a, quote, guidance document for enterprises on anti-monopoly compliance, end quote, which includes following, quote, overseas anti-monopoly compliance risks and providing, quote, antitrust risk management, end quote. And last up, Evergrande has had a very bad week, another bad week. Let's go through this crisis hit developers' developments from the last few days. On Wednesday, according to a Hong Kong Stock Exchange filing the following day, China Evergrande exited its stake in internet company Hengteng Networks Group, raising $273 million US. Hong Kong-based Hengteng is primarily engaged in film and television production, distribution, and online streaming platforms. Evergrande held a majority stake in the company 12 months ago, but has had to sell down its holdings in recent months. We remember just 2 weeks ago, for example, we discussed it on here, Evergrande sold about $170 million US in shares in the internet company to meet that week's interest payment deadline. It now owns none of the company. Evergrande faces more deadlines next week on overdue interest for domestic and international debt, with one offshore deadline for $135 million US due on November 23rd, as well as an onshore payment of 118 million RMB, about $20 million US, due on November 26. If it makes next week's payments in December, Evergrande has another approximately $300 million US in payments to make, most for offshore debt. But that is still nothing. The true test comes next year when over $3.5 billion US becomes due for US denominated debt over the 2 months of March and April. It's being reported this week that Evergrande's founder and chairman injected more than $1 billion US of his personal wealth into the company to meet financial obligations. But this is just a drop in the bucket. There is a deep concern from international financial analysts that Evergrande is going to collapse. For example, on Thursday, S&P Global Ratings analysts said in a report that, quote, we still believe an Evergrande default is highly likely, end quote, observing, quote, the firm has lost the capability to sell new homes, which means its main business model is effectively defunct. This makes full repayment of its debts unlikely, end quote. And there isn't much confidence for the rest of the property sector either. We discussed this a lot in recent days and we'll continue following it. This week too, Moody's expressed in a research note that it expects corporate bond defaults, especially in the Chinese property market, to continue to rise in 2022. Okay guys, that is this episode of China Update. I hope you enjoyed it. Make sure you throw your comments below. As always, I always love hearing from you guys. Wherever you are, hope you're keeping safe and keeping sane. I will see you next time on China Update.